Tamikaze here with talking about exit strategy. I want to talk about a few things to help you maximize your gains and when to take your profits. So I get this question all the time, so I might as well make a video on it to show people kind of what I do. Now, everyone has their own style. Keep that in mind. Everyone has their own ideas on when to take profit. And quite frankly, it matters on what kind of trade you're looking to get into. So for like a day trade or a swing trade has much different profit targets than say a leap trade. A leap trade you could hold for 6 to 9 months where you may get into a swing trade and actually turn it into a day trade because it goes nuts. So, this is something where you might get in right here thinking to swing trade it, and then all of a sudden it goes up 16% in a day, and IV premiums go really far up. You might want to take profits there because it might trade sideways for a while to gather more buyers. But how do you know that is the thing. So ideally, and I know this isn't always the case, but ideally, if you get into a position, you should have a plan going in. My most profitable positions are when I game plan for them, and basically I do all of the work for it, and then I just set an alert for the breakout. So like this, I would be watching this, and I would have just set an alert for over this green line, and when the alert goes off, that's when I go in, and then I have a plan basically with a goal in mind for a target, either using resistance lines here or you can use candlesticks. So the reason I put a whole course out there on candlesticks is candlesticks can tell you a lot. The type of candlestick combined with volume can tell you a lot. So if you're seeing this explosion here with increased volume, and then the volume starts to die down, when you start seeing this volume down and it starts trading sideways, that's probably a good part to start taking profit. Um, if the uptrend breaks and you see it start to reverse, that's a good part to take a profit. And you can take profit on the way up. Let's say your goal, is to make 30% on every trade, and the setups you play tend to aid that. Then if that's your goal, then take profit at 30%. You may hate yourself for losing out on additional profit, but I guarantee you'd hate yourself more than holding too long and losing the profit that you had. That's where I hate myself more, is when I had 40% profit and I was going for 100 or 200%, and turns out that 40% right here was the reversal and went down, and then now I lost out on a 40% gain and ended up taking a 40% loss. That's one of the most painful things to know, that you were right, but you didn't sell in time. And so you got to be cognizant of that it doesn't always go up that high. It may only go up here and then reverse right away. So we have to be able to ready. For me, like if I have a position here, if I'm playing options, I might take 10 contracts, or maybe I take 100 shares. So as it's going up, every 10%, maybe I'll sell one and make sure I take my gains. So, it doesn't count as a day trade if you're doing one at a time. Selling all 10 contracts counts as a day trade. And let me explain that. So let's say you can make 10 separate individual trades for all those 10 contracts, and it still counts as one trade total towards the pattern day trader rule. So there's no harm in scaling in or scaling out. So if you were to say buy a couple down here and then buy more here, which is exactly what I did, I literally bought here on this reversal here. So I bought here, and then as it broke this line, I bought more, and then I started to sell on the way up, and I left some runners here. And when it met this resistance here, and I'm just going to scale in so you can see this. So what we saw here was basically a bull formation happening, and as it was riding this resistance, there's no guarantee that it's going to go up here. So I sold a few contracts uh, to secure that, and then when it exploded today, and it got to my target of like 1750, um, I sold out. I sold out right here today, and it ended up reversing. And if it went back up, that would have been fine. If it ended up going up to 1820, I wouldn't have missed out because I had really good gains and I was happy with it. So you just got to keep in mind that if you're not a technical analysis person and you're just going for profits and things like that, it is very important when you're day trading to learn technical analysis. And I can't understate that. If you're day trading, it is very important to learn technical analysis. If you're relying on others for it, you're going to lose money. So if you can play the charts and understand the charts, and that's why I put so much time into education, is so you can understand the charts, so you know when to get in and you know when to get out. And that's why it's so important. So make sure you learn your basic trend lines. Just to recap, make sure you learn your trend lines, make sure you learn your candlesticks. So let me explain the candlestick thing here real quick. So you can see here, basically, when you have a large candlestick like this and the bearish candlesticks fail to break out of this large candlesticks, that is very bullish and most likely will go up. So, this is basically a hammer, and then you have some tweezers here, and then you have some tweezers here. So I have a couple of minute videos that explain all of these different formations, and I would highly recommend them. And you can watch these candlesticks happen in real time and decide whether you want to get in or out. So seeing these candlesticks right here repeatedly with the bearish candlesticks engulfing and breaking on here, this would be very high warning signs that this was done. So these are very bullish formations, and these are very bearish. And I don't want to get into that in this video. I have separate videos for that, but make sure you look at candlestick formations. And this basically had a double top as well and a curve pattern. So this is an inverted cup as well. So a lot of this formation is telling you this was time to take profits. And this may go up tomorrow because it's resting on support, but this was definitely time to take profits today. So I hope to shed a little bit light on it. I might go a little bit more in depth if I get additional questions, but just to recap, you got to really have a plan going in. If you go in without an exit strategy, you're most likely going to lose money. So whether that's a profit target or a price target, there's a difference on that. You should always have a stop loss. So as the price goes up, make sure you lock in gains. So if it starts to go down, and then let's say you're up 30% right here, and it goes down to 20% right here, you might take that just to guarantee yourself 20%. So this is called a trailing stop loss, and is a very good friend to have. So if nothing else, make sure you have a trailing stop loss in place if you don't have anything else. If you have no plan, always have a trailing stop loss, and that is the simplest answer to everything. Trailing stop losses save lives. All right, thank you, and hope you enjoyed this video.